Welcome back to Alpha Recap, your quick post-market rundown from stockalpha.ai. We're walking through the biggest takeaways from April 21st, 2026. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Big day of earnings and some policy news that actually mattered, not just noise. So, what really stands out here is how a couple of corporate reports set the tone for the whole tape.
Totally. Two headlines really framed the day. UnitedHealth delivered a clean beat, raised its full-year 2026 earnings outlook, and authorized a $2 billion share buyback. Meanwhile, 3M also beat quarterly earnings, but gave full-year guidance a little below expectations. Beat with a caveat.
Right, and that contrast was the narrative engine. UnitedHealth's beat and raise plus a buyback checks a lot of boxes. Operational strength, clearer forward visibility, and capital allocation that can help per-share metrics. Analysts note that kind of multi-pronged result tends to lift sentiment across peers in health services.
Exactly. And to put numbers on it in conversation terms, UnitedHealth announced a $2 billion buyback. That's a big authorization. Now, a quick reminder, an authorization is intent, not instantaneous action. Tracking the actual repurchase pace is the follow-up.
Buybacks can be EPS accretive if executed because you're reducing share count. But timing matters. And as you said, the market usually rewards a beat and raise more than a plain beat.
Let's contrast that with 3M. They posted a quarter that beat consensus on earnings per share, but then flagged full-year guidance slightly below analyst estimates. That created the classic cautionary reaction.
Yeah, that tracks. Beat but guide down is always awkward. Traders who focus on surprise metrics might cheer the quarter, while fundamental investors who weight guidance will be more cautious.
So, what really stands out here is that we're seeing growing dispersion between reported results and forward outlooks. The market basically said, if you beat and raise, we'll reward you. If you beat and warn, we'll reprice risk.
I mean, when you step back and look at this, it's not just those two companies. There was also a wave of analyst upgrades that moved positioning ahead of earnings. BNP Paribas upgraded Intel, and Goldman Sachs upgraded Allianz, citing roughly a 16% upside for the latter.
Upgrades like that can create short-term flows and repositioning. Analysts' conviction can push demand into a stock before the company even reports. That's informational, and it can amplify moves, but it also raises expectations that companies must meet.
Right. And the other thing is that upgrades can increase volatility around the actual results. If everyone piles into a name, the bar gets higher.
Quick sector snapshot. Industrials have been on a run, about 13.3% over the last 6 months, which is roughly 7.5 percentage points ahead of the S&P 500. That's meaningful outperformance.
Honestly, I was a bit surprised by this one. Industrials have had momentum, possibly tied to CapEx and reopening narratives. But then 3M's cautious guidance shows how sector strength can coexist with stock-specific weakness.
Exactly. Sector rotation and micro drivers coexist. A strong sector return can be concentrated among a few names, or driven by macro indicators like PMIs or manufacturing CapEx. So blanket exposure can underperform selective, stock-level positioning.
Let's shift to policy, because that was a real headline. The federal government launched a tariff refund claims portal this week. For big importers like national retailers, that could convert into one-time cash inflows.
The portal formalizes the process for importers to seek refunds on previously paid tariffs. For companies with large import volumes, this could boost near-term cash flow and temporarily improve margins, but the size and timing are uncertain.
Right. It's a potentially material one-time event for some companies, but it's contingent on filing claims, eligibility, and government processing. So markets will watch 8K disclosures and earnings commentary for any quantification.
And that's where those Form 8K filings come in. There was a cluster of them from small and mid-cap names this week, covering things like results of operations and other events. Primary filings often contain material info before press releases do.
Short reactions.
Big move.
Not what anyone expected.
Let's unpack the investor implications. For short-term traders and momentum players, expect elevated volatility around the beats versus guidance divergence and around analyst upgrades. Tactical traders may find pre-earnings runs and post-release reversals, but dispersion is high.
For income and total return investors, analysts note UnitedHealth's buyback and raised outlook signal an active capital allocation stance that supports long-term cash return profiles. But yield-focused investors should weigh buybacks versus payout stability and regulatory risk in managed care.
Value and long-term fundamental investors need to separate one-time policy cash flows from sustainable earnings power. Tariff refunds might boost liquidity, but they aren't the same as recurring revenue. Digging into filings and management commentary is essential.
Event-driven and activist strategies also have things to watch. The portal and sizable buybacks create potential catalysts for activism or event trades. Monitoring filings is critical there.
A couple of strategic considerations to track. Watch management's reconciliation language when beats come with cautious guidance. Is the guidance conservative because of macro uncertainty, product mix, or one-time items?
Track buyback execution and timing. A $2 billion authorization is meaningful, but payoff for per-share metrics depends on actual repurchases and when they happen.
Also watch tariff refund filings and follow-on disclosures. It's a two-step process. File claims, then disclose material effects. The market will only price what's actually quantified in filings or earnings commentary.
And when you see upgrades like the ones for Intel and Allianz, evaluate the new price targets and EPS assumptions against independent models. Upgrades reposition flows, but they also add timing and execution risk.
Before we wrap, quick synthesis. Today highlighted growing dispersion between reported earnings and forward guidance, the power of analyst catalysts to shape positioning ahead of earnings, and a tangible but conditional policy move in the tariff refund portal.
Bottom line, UnitedHealth's cohesive beat and raise plus buyback fed the bullish narrative, while 3M's guidance shortfall tempered enthusiasm in industrials despite recent outperformance. Expect selective, event-driven opportunities and elevated cross-sector dispersion as investors parse disclosures.
Clear takeaways. 1. A beat alone doesn't guarantee a rally. Guidance matters. 2. Analyst upgrades can move stocks before earnings, so watch positioning. 3. Policy actions like the tariff portal can create near-term liquidity, but with process risk.
Yeah, that tracks. Thanks for breaking it down. If you want more detail on any of these points, go to stockalpha.ai, where we've got the source analyses and links to filings.
And if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly via the Q&A feature, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
All right, that's it from us. Thanks for listening, and we'll see you on the next Alpha Recap.